Let us see the next question. ANP Plan, a hedge fund, currently has assets of rupees 20 crore. Chartered accountant X, manager of the fund, charges fees of 0.10% of the portfolio asset. In addition to it, he charges incentive fees of 2%. The incentive will be linked to gross return each year in excess of the portfolio maximum value since inception of the fund. The maximum value of the fund achieved so far since inception of the fund about 1.5 years was 21 crore. You are required to compute fees payable to Chartered Accountant X. If return on the fund this year turns out to be 29%, 4.5% positive, and 1.8% negative. That is the question. Please go through the question. So let us have understanding of the question. The question is providing the information something like this. Let us say that the today's date is 1st of January 2021. The question is providing the information that today the net assets has value of rupees 20 crore. The question is providing the information that Chartered Accountant X, manager of the fund, charges fees of 0.10% of the portfolio asset. So the charges for managing the mutual fund investment is 20 crore into 0.10%. That comes to 2 lakhs. Do not write anything, let me explain to you. Okay. In addition to it, so apart from this, he charges incentive fees of the 2%. The incentive will be linked to a gross return each year. Highlight the portion in excess of the portfolio maximum value since inception of the fund. So we understand that say the incentive will be given for a return in excess of portfolio maximum value, and that is at the rate of 2% since inception of the fund. Maximum value of the fund achieved so far since inception of the fund about 1.5 years was 21 crore. So the question says that say the mutual fund was formed say before 1.5 years. Let us say it is 1st of July 2019. From that date to this date, the maximum value achieved by the mutual fund is an amount of 21 crore. So the question is providing the information that if at all Chartered Accountant X is able to generate a return which is in excess of this. So what is the return? We understand that the 21 crore minus 20 crore divided by 20 crore into 100. So we understand that this comes to 5%. So the question is indirectly providing the information that if at all the mutual fund is able to, the portfolio manager is able to say generate a return from the mutual fund assets say at a rate which is greater than 5%, then in that case incentive will be given in a way that say for last 1.5 year, the maximum value of the mutual fund is 21 crore. So we understand that say if at all the Chartered Accountant X is able to generate a return which is greater than 5%, means value of the portfolio is more than 21 crore, then an incentive will be given. What will be the rate of incentive? It is provided as 2%. I want you to write in the chat box if at all the return of the mutual fund is 29%. Then in that case, what will be the amount of the total fees payable to Chartered Accountant X? So friends, we understand over here. Kindly use your calculator. that is an amount of 20 crore into 29 percentage. That comes to 5.8 crore. If at all the return is of 1 crore, then till that point of time there is no incentive. So minus 1 crore. So the excess return would be 4.8 crore. Then 4.8 crore into 2 percentage. That comes to an amount of rupees 9,60,000. This is the way the incentive will be given in addition to the basic amount of the charges of 2 lakhs. This is what we understand. There are some other ways also by which you can make the calculation of answer, wherein you can understand that it is 20 crore into 29 percentage actual return minus 5 percentage, that is the minimum return, into 2 percentage, that is incentive. This is the way also you can compute the answer. So 20 into 24 percentage into 2 percentage, that comes to 9,60,000. This is the way you can find the answer. Fine. So let us write down answer. In this question, we have to compute amount payable to chartered accountant X, comma, for different returns. Full stop. Basic amount payable is rupees 2 lakhs. In the return in bracket, it is 20 crore into 0.10 percentage. Full stop. In addition to that, incentive will be given if actual return is more than 5 percentage. How this 5 percentage is calculated? It is 21 crore minus 20 crore divided by 20 crore into 100. This is the way we understand that the incentive will be given. Okay. So calculation of amount payable for different returns. Okay. Return and fees payable. It is 29 percentage, 4.5 percentage, and negative 1.8 percentage. That is the way the the returns are there. So it is 20 crore into 0.10 percentage, that comes to an amount of 2 lakhs, plus 20 crore into 29% minus 5 percentage. So the excess comes to 24 percentage into 2 percentage. So it is 2 lakhs plus 9 lakh 60,000. That comes to 11 lakh 60,000. In the next case, so there is no incentive because the return is less than 5%, less than or equal to 5%. So it is 20 crore into 0.10%. That comes to an amount of 2 lakhs. And in the last case, again same amount, that is an amount of 2 lakhs, because if at all the return is negative, even in that case no incentive will be given, but the basic amount is supposed to be paid. And importantly, remember that so this 0.10% is required to be computed on the value of the asset at the beginning of the period, not at the end of the period. Accordingly, we are required to find answer. So this is the way the amount of the fees payable to the portfolio manager is supposed to be found.